Most seniors I talk to are still paying bills they legally don't have to pay anymore. Not because they're careless, just because nobody told them the rules changed. And in 2026, quite a few of those rules are worth real money. We're talking about things like Medicare premiums, property taxes, utility bills, prescription costs, and more. If you're 65 or older, some of these may already apply to you right now. So, let's just go through the full list together. Plain and simple, no rushing. Back in the early 2000s, most of these programs were small and scattered, a discount here, a waiver there. But over the past several years, especially after 2020, a lot of states and federal agencies started expanding these programs because they recognized something important. A large portion of seniors were spending money they didn't need to spend, simply because the information never reached them. By 2026, many of these programs have grown significantly, and the income limits have been raised, which means more people now qualify than ever before. The problem is the government doesn't exactly send you a letter saying congratulations. You no longer have to pay this. You have to know to ask. So let's talk about who this actually affects. Generally speaking, if you are 65 or older and your household income falls somewhere between about $20,000 and $55,000 a year, depending on where you live and what program we're talking about, you likely qualify for at least several of these. Some programs go higher than that. Some are based on your filing status, whether you're single or married. Some are tied to whether you own your home or rent. A few are available to nearly every senior regardless of income. I'll be clear as we go through each one so you know where you stand. The first one is Medicare Part B premiums. Most people just pay whatever bill arrives and assume that's the number. But there's a program called the Medicare Savings Program. And in 2026, if you are single and your income is roughly $22,000 a year or less, or married with a combined income under about $30,000, the state may pay your Part B premium for you entirely. That's up to about $2,000 a year back in your pocket. The mistake people make is thinking they earn too much to qualify. The limits have gone up. It's worth checking again, even if you were turned down before. The second bill is prescription drug costs. There's a program called Extra Help, sometimes called the Low Income Subsidy. If you're on Medicare Part D and your income is under about $23,000 as a single person or $31,000 as a married couple, you could pay just a few dollars per prescription instead of what you're paying now. Some people in this program pay nothing at all for their medications. The common mistake here is that people assume they have to be nearly broke to get this. That's simply not true. The income limits are reasonable, and millions of people who qualify are not enrolled. The third is property taxes. This is a big one. Almost every state in the country has a senior property tax exemption or a freeze program, but you have to apply for it. In many states, if you're over 65 and your income is under a certain threshold, which varies by state but often falls somewhere between $30,000 and $75,000 per year, your property taxes can be reduced significantly or frozen so they can never go up again. Some states cut the taxable value of your home in half. The mistake people make is thinking this only helps people with low incomes. In several states, a couple earning $60,000 or even $70,000 a year can still qualify for a meaningful reduction. The fourth bill is utility costs, specifically electricity and gas. The Low-Income Home Energy Assistance Program, or LIHIAP, helps cover heating and cooling bills. In 2026, the income limits for this program have been adjusted upward in most states. A single senior earning up to about $27,000 or a couple earning around $36,000 may qualify for direct help with their utility bills. Many seniors on fixed incomes simply don't realize this applies to them because they assume it's only for people who are in serious financial hardship. That's not the case. It's for people on fixed incomes who are managing carefully, which describes a lot of people watching this right now. The fifth is phone and internet bills. There's a federal program called the Affordable Connectivity Program and a companion program called Lifeline. Depending on where you live and your income, you may qualify for a free or deeply discounted phone plan and internet service. If your income is at or below 200% of the federal poverty level, which for a single person is roughly $29,000 a year in 2026, you likely qualify. Some seniors are paying $80 or $100 a month for services they could be getting for a fraction of that cost, or, in some cases, for free. The sixth is Medicare Part A premiums. Most people don't pay for Part A because they worked long enough to earn it. But if you or your spouse didn't work the required number of quarters, you may be paying a premium for Part A that could be as high as $500 a month. What many people don't know is that the Medicare Savings Program can also cover Part A premiums for people who qualify based on income. If you are paying for Part A right now, this is worth an immediate phone call to your local Medicaid office. The seventh is dental and vision costs. These are often considered optional expenses that seniors just have to absorb, but in 2026, many Medicare Advantage plans are required to include some dental and vision coverage, and many states have added dental benefits to their Medicaid programs for seniors. If you have original Medicare and no supplemental plan, you may want to look at whether a Medicare Advantage plan, with dental included, would actually save you money overall. For someone spending several $100s a year on dental work, the math can be quite clear. The eighth is income taxes on Social Security. Here's one that surprises a lot of people. If Social Security is your only source of income, or close to it, you may not owe any federal income tax at all. The rule is that Social Security benefits only become taxable when your combined income, meaning your adjusted gross income plus half your Social Security benefit, plus any tax-exempt interest, exceeds $25,000 for a single filer, or $32,000 for a married couple filing jointly. A lot of seniors are filing and paying taxes they don't legally owe, simply because they didn't know this threshold existed, or they didn't calculate it correctly. The ninth is Medicare Supplement or Medigap premiums. This one is a bit different. You do pay for Medigap plans, but if you're enrolled in one and your health situation has changed, or if you never shopped around after first enrolling, you may be paying far more than you need to. In 2026, there's more competition between Medigap providers than ever before, and switching to a comparable plan with a different insurer can sometimes save $50 to $200 a month with no reduction in coverage. This isn't a bill you stop paying entirely, but it's a bill many seniors are overpaying for unnecessarily. The 10th is long-term care costs. If you're currently paying out of pocket for home health care or assisted living, there are programs that many families don't know about. Medicaid, when your assets are structured correctly, can cover long-term care costs for seniors who qualify. Additionally, veteran seniors may be eligible for the VA Aid and Attendance benefit, which can provide over $2,200 a month toward long-term care costs. Many veterans and their surviving spouses are not receiving this benefit simply because they didn't know it existed or thought the application process was too complicated. The 11th is state income taxes. Several states do not tax Social Security benefits at all. A growing number of states also exempt pension income or retirement account withdrawals up to a certain amount. If you recently moved or are considering moving, or if your state's tax laws have changed and you haven't revisited your tax situation, you may be paying state income taxes that either don't apply or could be reduced with proper planning. This is worth a conversation with a tax professional or a free tax preparation service like AARP's Tax Aid Program, which is available at no cost to seniors. The 12th is late enrollment penalties on Medicare. This one is about a bill some seniors are paying every month as a permanent penalty because they didn't enroll in Medicare Part B or Part D on time. What many people don't realize is that in certain situations, you can apply to have that penalty removed or reduced. If you delayed enrollment because you had an employer coverage and your employer didn't correctly fill out the forms, or if there was a documented misunderstanding, there's an appeals process. It doesn't always work, but it works more often than people expect. And for some seniors, the penalty is adding $50 to $100 a month to their bill permanently. That's worth looking into. Here is what I want you to do this week. Pick one item from this list that you think might apply to you and make one phone call. If it's property taxes, call your county assessor's office and ask if there's a senior exemption and how to apply. If it's Medicare Extra Help or the Medicare Savings Program, call 1-800-MODICARE or your state's Medicaid office. If it's the LIHEAP utility program, go to needhelppayingbills.com and type in your zip code. One call, one program. That's your homework this week. You don't have to tackle all 12 at once, but starting with one can put real money back in your hands. If this video was helpful to you, please subscribe to this channel. Every week we go through one of these programs in more detail, so you always know exactly what steps to take and exactly what to say when you make that call. Next week, we're going to look specifically at the Medicare Savings Program and walk through the application step by step, because that one alone can save thousands of dollars a year for people who qualify. We want to make sure you don't miss it. Hit the subscribe button, and we'll see you next week.